All right, all right, all right. Good morning, everybody. Welcome to May. I'm happy to be the first one to tell you that, right? We've got an amazing next month ahead. We had a great January, great February, great March, great April, and now May is welcoming us, and I'm ready to give it a hug with open arms. We've got a Fed Day today, right? You know, you've actually got waiting to greet you in May. Jerome Powell, right? Might not have been who you wanted to greet you, might not be the person that brings the biggest smile to your face, but he's the one that's here to welcome you into May, right? Him and NSYNC. So that's what you get. Might not be what you want, but it's what you get. We got him at 2:30, so make sure you have your alarm set, right? Everything, alerts, all that good stuff. And if you struggle on Fed days, make sure you take the opportunity to go back and review how Fed days have transpired in the past, right? On that, that rewind feature on Thinkorswim, right? I forget what it's called, but you guys know what I'm talking about. In the top right corner, we've gone over it extensively in the last challenge, the chart with confidence challenge. But yeah, taking some time to use that feature to look back and essentially just trade past Fed days in order to give you a good feel as to how we can move here, right? And don't just let every Fed day sneak up on you. You could go, and use that on demand. That's what it's called. You can use that on demand feature. Look up on Google, hey, when was Powell's last testimony, or when was the last Fed day where Powell spoke? It gives you the date. You go back to that date, go to 2:30. Right. Normally he's a few minutes late, so go to 2:30, and then you'll start to see how we move, and you can practice that strategy that we use on Fed days, right? Which is fading the first move. Free game for anybody tuning in and watching. If you fade the first move, typically money will find you on Fed days when Powell is speaking. So that's the exact same strategy today. So make sure that you take some time. If you have a second today, open up Thinkorswim, hit that on-demand feature, go back to our last Fed day, see how we move, and then you can get a feel for how things transpire, and you can look to possibly bust a big day trade out of the park today. Especially because it'll be a busy one for me. Got 5-year anniversary with my beautiful girlfriend Bailey, who made me this amazing scrapbook, right? From like scratch, like literally from scratch. Like, I mean, this is just I don't know how I'm supposed to compete. So, anyways, that's why we started at 8:50 instead of 8:45, because I was just trying to wipe my tears away. But it'll be a busy day for me running around, and I've got stuff planned for later. But I'm gonna try and be, free and at a computer while Powell is on there parting those meat flaps, and we can, orchestrate some nice day trades. But once you have the game plan, it's really not too tough to go ahead and execute, and that's what we're looking to do today. I appreciate that, my man, Big Tage. Good morning, Rob. Good morning, Tage. Great to see you guys here this morning, and everybody joining us from the future, watching via replay. Great to have you here. But just like it's May 1st, we want to get exactly that much better, 1% better daily. That's what we're here for, each and every day, each and every session. So make sure you throw those ones in the chat, whether that is live or on the replay, because you want to signify that intention to get 1% better. And let's roll. Yeah, thanks. I love it. I love it. I appreciate the love. Right, my men there. Y'all know how it is. You got to show up on the anniversary days. So I'm excited. It should be a great time. Let's see what we got going on here. Let's see what Pal's got going on for the anniversary. If he wants to give us an anniversary slap in the face or a bouquet of flowers. So our top news, we're talking about him, right? Higher for much longer, much being in brackets, question mark. Federal Reserve officials have been saying that the path to achieving 2% inflation would be a bumpy one indeed. Inflation has come in hotter than desired for the first 3 months of 2024, meaning that the higher for longer will continue to be priced in by investors. As such, don't expect any change when the FOMC announces its monetary policy decision later today, in the expectation for a June rate cut, once the predominant view among market participants also looks out of reach. So this is something that has to be constantly fluid based off of the data, right? We were looking to get rate cuts in the first third of the year, right? With based off of how the data was presenting itself at the end of 2023, the data did not continue, right? It's like when you're in a class and the teacher's like, hey, as long as you continue on this path, you're gonna pass. Like you got it, and you just fall off, right? You might give it 2 good weeks and then you stop showing up. That is what happened, right? So we were looking good if we kept that trajectory. We did not keep that trajectory, and you got inflation that's coming in hot consecutive months, and now that's pushing back the time in which we get a cut. So does it still look like we get a cut in 2024? Yes. Might it be in June, like what we've been expecting? No, it could be in the latter portion of it. But it is still an election year, and I think if either of the old guys that are running for reelection want it, they got to make something happen when it comes to interest rates, right? And Trump isn't in that Oval Office anymore. Biden is, so I'm sure he'll put all types of pressure on Powell to get at least one cut happening because we're going into election time, right? So sometime before November, he'll be pressing for it, and there is that separation of all these different, entities, but there's still pressure, right? There's still pressure between them, and I think the pressure will be applied because people have memory like goldfish nowadays, and you want a lot of good things, a lot of good news transpiring before you have to go in to the polls, in order to have that rosy outlook. So, what it means, policy will likely remain. Do we talk about that? Yes. Actually, no, we didn't. Policy will likely remain steady for the sixth and seventh straight Fed meeting, with the central bank holding the federal funds rate target range at 5.25% to 5.5%. In fact, over half of Wall Street breakfast subscribers don't see any rate cuts in 2024, according to the most recent survey Monday. The sentiment follows comments from Fed Chair Jay Powell earlier this month, which outlined that the Fed's restrictive policy needed more time to work as the labor market remains strong and disinflationary dynamics have stalled. U.S. stocks ended lower on the last day of April, dragged down by some disappointing earnings reports and economic data. Market participants were also being cautious a day ahead of the FOMC's latest monetary policy decision. I love how they say, like, on the last day of April, dragged down by some disappointing earnings reports and economic data. Was there any disappointing earnings report and economic data? Was it the consumer sentiment that came in like worse than expected? That might have been it that transpired. But overall, we've just got QQQ, right? Like we talked about yesterday in the trading group, QQQ in this daily bear flag, right, where we dropped, we lost the key level, we popped, and we are testing that key level. We tested it 2 days ago and we rejected it yesterday. Now, whether we continue to reject it and ultimately fire that bear flag will likely be contingent upon the information that we get today and how the market reacts. So, the balance sheet. There will also be a focus on the Federal Reserve's plans to slow quantitative tightening during Powell's afternoon presser. After the last FOMC meeting, Powell said the policymakers expected to reduce the rate of its balance sheet runoff fairly soon, which was backed up in the FOMC minutes released 3 weeks later. On average, securities have run off at a rate of around $75 billion per month, less than its current cap of $95 billion per month, with the Fed's total asset portfolio recently declining to 7.4 trillion from about 9 trillion in June of 2022. Let me also check and see when yesterday. No, so it wasn't actually during the consumer sentiment data that we got the drop. I was about to say, because normally they'll kind of conceal what was going to happen behind some information that drops, but I believe we got consumer confidence data yesterday at 10. But we didn't start to get that selling, really, really happening until 11. So they didn't use that to necessarily conceal the move, but yeah, big old bear flag, and we broke that short term uptrend that we had at the portion of the flag yesterday, and we'll see. We'll see what we end up getting here. Okay, came in worse than expected. Thank you, Vivian. I appreciate it. As always, like just absolute angel and godsend. Yeah, came in worse than expected, which would seem to sit right in line with expectations of what we got yesterday, right? We're in a bear flag. We're right at that rejection level, major level that was supported in the past, now resistance. Then we get back consumer confidence data. Makes sense that we moved how we did yesterday, right? So when they talk about the disappointing earnings reports, I don't really know if the market cared as much about any of the earnings reports that came out yesterday before market close, right? But that consumer confidence data and us hitting that rejection level for that bear flag where we could turn around, that made sense in terms of contributing toward yesterday's sell-off in the major indices. In terms of earnings news, cloud lift, Amazon climbed 1.3, only 1.3%. Talk about IV crush, man. Oh, geez. Amazon climbed 1.3% after hours to $177.20 per share on Tuesday after posting better than expected Q1 results, including, oh, yeah, here you go. Ooh. All right, bye. Love you. Let me see here. Yeah, I grabbed her keys quickly on the way out, and you guys know how that goes. Can mess up the whole day if you take the wrong keys. Better than expected Q1 results, including a beat from Amazon Web Services. However, gains were curbed by the e-commerce giant's sales guidance. So they got a beat from AWS. No shocker, you guys know AWS. It has been for the past few years. The main revenue driver and source of growth for Amazon. There's not great margins in being able to ship everything everywhere within a day. So it's really the Amazon Web Services that does a lot of that great work. Of which we have some of Amazon Web Services finest right here in the Stock Options Made Easy community, right? However, and we had some AI one-on-ones talking about how we can make the work you do within AWS even cleaner and smoother and less friction, right? Shout out Kaizen on betterdaily.com. If you want to learn, how to integrate AI more into what you do and bring more professional value within the corporate structure that you are a part of, make sure you're there learning these tools. You can have me sift through them for you because I've sifted through a lot of AI tools that are crap and then a lot more that come through when you need them in the clutch. Back to Amazon. However, gains were curbed by the e-commerce giant's sales guidance. On the earnings call, CFO Brian Olsavsky shot down speculation that Amazon would join other tech powerhouses in initiating a dividend, but would instead stick with its philosophy of investing in growth initiatives like going all in on generative AI. Yeah, I mean, you got to mention AI in your earnings calls now. Like it's just necessary. Investing group leaders Jonathan Weber and Ahan Bashi both applauded the strong quarter, but they have different takes on Amazon's valuation. Yeah, cloud kept them afloat, but man, 1.3%, that ain't nothing. They're basically opening. I mean, they literally are opening flat. No, I think they're here. Let me see. Da, da, da. 1 second. Let me see. Okay. Sorry, we got lots going on this morning. In terms of media news, AI content, OpenAI and Microsoft have been sued by a conglomerate of newspapers owned by investment fund Alden Global Capital. Let me double check, make sure. Okay. Oh, jeez. Oh, no. OpenAI and Microsoft have been sued by a conglomerate of newspapers owned by investment fund Alden Global Capital for alleged AI infringement. 8 dailies were part of the lawsuit, including New York Daily News, Chicago Tribune, and Mercury News. The development comes a day after OpenAI signed a deal with the Financial Times to use its content to train AI models. Google has also reportedly closed a deal with News Corp to pay the media company $5 to $6 million per year to develop AI-related content and products. Yeah, so I guess they are mad that Google, I mean, the OpenAI and Microsoft pulled from their articles and their intellectual property, which is something that this has been a headline for a while. It's not like this is new. And these are huge companies. They get sued each and every day. So I'm not really taking too much, taking it too much to heart. But yeah, I mean, OpenAI went about training its model on all of these articles that were out there, but you can't go and then charge someone for something like that and not pay the people that you use to train the model when you are paying the people that you're now using to train the model, right? It's like, hey, I got all this from you for free, but I'm going to pay this person. So the lawyers come out, but yeah, I don't think it's anything that's going to affect Microsoft. But yeah, these companies. I mean, we'll get into it. We'll get into it during the Kaizen event again, June 19th through the 21st. Those evenings we'll get into it exactly what these companies are doing. They're making a lot of moves like that are more so low key, but are making major ripples in the AI race that's happening. A lot of different acquisitions, a lot of positioning, a lot of these companies are making kind of like pivots that you wouldn't really expect based off of the investments that they're making in AI. And it's really interesting to see, a lot to keep up with. So we're just going to, instead of trying to fit that all in one of these sessions, we're going to put it in a nice 3 days and go over all of it, how to use the tools, which companies will be benefiting most, and then some nice sleepers like our beautiful app, right? App Lovin'. It's almost doubled since that was called out, right? And thrown in a reel. We'll go over some sleepers that could be the next beneficiaries of this AI wave. In terms of on the move, cannabis rescheduling, cannabis stocks, pot stocks were ripping yesterday. They rose sharply late Tuesday on reports that the DOJ would reclassify marijuana as a less dangerous drug. Moving marijuana to the Schedule 3 category would make pot federally obtainable with a prescription and pave the way for significant tax benefits for cannabis companies. Marijuana ETFs like YOLO and MJ soared over 20%, while shares of cannabis growth company and Tilray surged 80% and 40% respectively. I was watching CGC after so I saw the news and I was like, oh, and it honestly didn't even occur to me like, oh, to check out the weed stocks until later, and they were just pumping, and I was like, cool, that's awesome. Definitely not, jumping on that fueled up rocket now. But yeah, CGC was crushing it, Tilray crushing it. It's funny looking at their charts too, because like they had such a crazy day, but their charts have been just beaten down so much that it like barely registered on like the weekly and all that. It was just so crushed because they had their heyday like what might have been 8, 9 years ago. So like people are still holding since then that bought way, way high on stocks like Tilray. And they're like, Lord, please push me back. They might get back there. And it's definitely a patient run. That's why you just don't dive into stuff that's a fad and you don't know what it's about, because man, you don't want to be like, you don't want to sell low, but you also don't want to be holding something for 9 years in the red. Like, talk about, like, we had to cut some positions yesterday. If you had some June positions that we had in oil, unfortunately didn't work out as best as our first and second rounds on oil. The 2025s are fine, but like we had to hold those, for a few weeks. Imagine holding something for 8, 9 years and just being in the red, just like the mental capital expended, not worth it. And the buying power that's caught up in it, also not worth it. Use that for something that's a little bit more spicy and can bring you some turnover or some return now. In terms of today's markets, looking mostly red here. We've got pretty much all markets in Asia closed except for Japan. Hong Kong, China, India, all closed. Oh, we've got literally everything closed. Is this some holiday? Is this some holiday like everywhere except for here? Forgive me if I'm like offending some group and I have no idea of what holiday it is, but we've got all of Europe, or no. Okay, so we've got London flat, Paris is closed, Frankfurt is closed, Hong Kong closed, China closed, India closed. Not often that all of those are closed on the same day. Japan, we're down 0.3, the Dow down 0.3, S&P down 0.5, NASDAQ down 0.8, crude down 1.5, gold flat, Bitcoin down 6.6%. Today's economic calendar, ISM manufacturing index at 10, could cause some volatility, but overall, the main thing is going to be today, 2 p.m. We get the Fed announcement, which is likely they're going to keep rates unchanged. 2:30 we get Powell, right? So I'm pretty much not planning to do anything. In fact, I'm going to be doing running around in the first half of the morning, because you guys know how I do on Fed days. Typically, I don't do much trading at all, and I wait for Powell to come on at 2:30 p.m. because this is what we've been waiting the whole week for, right? So again, if you are looking to execute some day trades today, don't wait until you're in the middle of the fire to learn how to cook over an open flame, right? Use that on-demand feature on Thinkorswim. Look up on Google, when was the last Powell testimony after an FOMC rate decision, right? Or when was Powell's last testimony? The last time we had a crazy Fed day? Go on the on-demand feature on Thinkorswim, put in that date, go to 2:30 p.m., right? It's in military time, so I guess 14:30 p.m. Go to 14:30 and trade that, right? See how the action moves. We talk about fading that first move. That first move, I believe, was a pop, right? We get that pop, buy some puts, then we ride it down and just see how it moved so you can know today, right? So you don't have to be trying to keep up or scrambling or this or that. If you really have the intention to get something done, you prepare for it. right? So make sure you're preparing and putting yourself in the best space for it. Because Anthony Edwards sitting here crushing it, pretty much the new face of the NBA. He wasn't, he didn't crush it in the playoffs just by saying, oh well, I'm gonna crush it, I'm gonna crush it, I'm gonna crush it, and then the playoffs come and that's when he shows up. It's like, no, I'm gonna crush it. So he's there for the practice. He's there early, right? He's there late. It's all of that leading up to the moment that makes you successful in the moment. Don't just say, man, I hope I'm ready when the time comes. And then the time comes, you're like, oh, I wasn't ready, right? Especially when you can go back and train and actually see how these things move. So take the time to do that, right? If you're sincere about wanting to leverage the possible volatility we get today, and let's see what Powell gives us. It could be, a nice bankable opportunity. In terms of what else is happening, we'll finish up here. Rapid fire stock news rundown. Binance founder CZ is sentenced to 4 months in prison. Honestly, not that bad. There we go. We always got everything happening in the background. Then I got grandma calling. All right, grandma, one second. Give me a second. Consumer confidence slips to lowest level since mid 2022. It's the data we got yesterday. Shout out Vivian on top of that, giving it to me this morning. That data real time. Pinterest, ticker pins, soars after topping 500 million monthly users. Congrats to Pinterest. PG&E nears deal with KKR for stake in power business spinoff. Chip disappointment. AMD reports latest quarterly results. Supermicro computers. SMCI also slumps despite profit beat. Yeah, semis, they're dealing with their own stuff right now, but I had a few people asking about them headed into earnings. Definitely nothing that I wanted to touch. Nothing that I wanted to touch at all. Right, I'll let them report and then kind of see what rises from the ashes there. Report cruise operator Viking prices IPO near top of range. Mideast boycotts hit sales at McDonald's. Chain talks value pricing. Did not think that the Middle East tension and conflict would be hitting McDonald's, but I guess there are knock-on effects that that you never foresee. Starbucks ticker SBucks drops to 52-week low on slash guidance. What do you mean? Y'all don't like the lavender foam latte for $10? Novo, Teva, AstraZeneca issued FTC warnings over bogus patents. Might be worth looking into, considering Novo has earnings tomorrow, right? Which is kind of interesting. Eli Lilly had earnings; they crushed it. Does that mean Novo crushes it? No, but they're both, sort of being driven by profits in the same arena right now, which is their weight loss drugs. Even though apparently there's some like weird side effects, so watch out for that. But Novo probably the only one that I'm looking at this week where it's like, okay, maybe I take a flyer on your earnings, and they've got it tomorrow. So if you want to do that, make sure you pop that in before close. Not super expensive. I think their contracts are like around $100, maybe less. Let me see here. Yeah, you can get them for just over $100. So not super expensive if you want to take a little earning stab with some YOLO money. Just make sure it's exactly that and not money that you might need to pay rent, right? But other than that, guys, we're done. Finished up for today's session. Welcome to May, right? Excited to be here. Excited to continue pushing, getting 1% better daily. Speaking of which, if you haven't, go register. I'mBetterDaily.com. Let's get it. We run, I try to do a few live teachings a year, and this one is the first kind of crossover between two very high value topics, and I'm excited to get to it, kind of share what I've learned and what I've spent my weekends and my time in the shower and my time running, listening to YouTube and podcasts and learning, right? Happy to share all that with the community as I continue to share it otherwise, right? In Holland endeavors. But excited. Detree signed up. Let's go. I love it. I love it. I love it. Yeah, a lot of you guys here are. I'm excited to see you guys there and to really push it. There's a lot of fun stuff, and I'm gonna start creating some stuff to kind of show you what's possible leading up to the event itself. So just different things in different sectors to kind of let you know what to expect. So I'm excited about that. But all right, guys, love you all. I'll be active in the afternoon. Other than that, I'm waiting for Powell. I'm not going to waste my time with whatever the heck the market wants to do beforehand. We're going to wait for the fireworks. Do that on demand exercise. See how we moved last time he was on, so that you know what to expect. You can trade it in real time to see, how he moved, and then you're ready by the time 2 p.m. comes around, right? You're already warmed up, not coming in cold. But everybody, have a great rest of the day, right? I'll see you back here tomorrow morning on YouTube for our next Premarket Prep session of the week. Have a good one.